All right. Let me just make sure my filters are turned on. Okay, that's good. All right. So, let's see. No, Goonie, do not. All right. So in today's class, I'm going to be going over the kind of the 30-second model that ICT talks about. Um, and I'm kind of have so I kind of get the gist of it, but there's a couple things where it's like I want to see how well it works, but there's a couple things like entering in the fair value gap versus not entering in the fair value gap, whatever it may be. Um, so that's what I'm kind of here to backtest. So let me go on the 30-second chart. So this is the 30-second chart, okay? And what the main thing that he talks about is we always need to find the drawn liquidity, okay, but we don't need a daily bias. So that being said, right, if I were to go like the 60-minute or just one day, um, you don't really need to know the daily bias for this, so I'm not going to worry about that. But if you know like the 15-minute and you think and you see, okay, we have a lot of momentum going towards the low, for example, in this candle, right? Especially this candle. Okay, we need to have a lot of momentum going towards the low. Pretty obvious, right? You don't have to guess the drawn liquidity. So if you're to go in the replay mode here, you don't have to guess if we're going to reject that or not, or reject this or not. Does that make sense? How you don't have to guess in live time whether we're going to reject this or not? Type 1 if that makes sense. You're not trying to guess if we're going to reject this. You kind of wait to see and then see if we do, see where the momentum goes. And then that will tell us, okay, the momentum is going to this low. We should go hit this low. Yeah, it says like reacting, not predicting. So in this situation here, right, I'm not going to even act like I knew we were going to reject here because I didn't, especially because we barely displaced below this low. But the idea with this model is he says find the drawn liquidity, meaning, okay, where's the market likely to go towards next? And if we have a giant red candle cutting through for a rally gap, well, then where's the market obviously likely to go? Probably this low. And this is not a 100% winner strategy because you're gonna lose. You're gonna lose when something like this happens, where we have a momentum going down to this low, and unless there's like an SMT, most of the times you will hit this low. But let's say you miss an SMT, you're gonna lose. Okay, so I think everything I have been teaching lately, just the SMT has been a really big part of my setups lately. I like to make sure there's no SMT before I take a setup. It's like a really, really big thing I've been just paying attention to a lot. But like in this example, you just want to make sure there's no SMT. Okay, where's the next 15-minute candle likely to go? Okay, in this case, we can easily confirm this low. Okay, why? Because we're rejecting off a PD array. And then that's when you go on 30-second. Okay, and all you're looking for is just some sort of high to be purged. Like 5-minute high or whatever it may be. And then you look for a 30-second fair value gap. Okay, and you can even see like on this time frame, you don't even get any. But okay, I would count this because you still technically know to the left, right? You are reacting off that bearish PD right to the left. So like the second I see this candle right here, okay, let me draw this out. The second I see this candle right here, it just like, okay, 30-second fair value gap. We rejected off a PD array, okay, a BPR as well. Whether we hit into this 30-second fair value gap or not, we should keep going down here. And this is kind of my thing. So there's probably going to be setups like this that are not going to be retraced into. And if you know the setup, it's a 12-point stop loss and 10-point take profit. So let's say we're to put a limit here at this red line. Let me just see if I can mark this. So let's say this line is red and you were to put a limit here. Okay. Your stop loss would be 12 points. Okay, it should be 6, 7, 5 months. About right here. and then your take profit will be right here. No, there isn't, Chow. Oh, wait, yeah, you're right. So the only problem I have with this fair value gap is, I mean, it's good, but there wasn't really much of a reaction yet on the higher time frame. When I see this candle, this kind of tells me like how important this PD array is. So this PD array to the left right here, okay, until I see a major rejection out of it, I don't trust it. I would not trust this fair value gap. This would need to be a lot more major. This isn't really that major to me. Yeah, pretty much. It's not going to be that long reliable. Okay, so really what I want to see is I want to see a major reaction to it. And to me, this candle is more of a major reaction, and we've already traded so far below this. So then here's like the dilemma. Like, so for people in my live stream this week, okay, I'm literally going to buy an eval account, and I'm literally just going to trade it on the screen. I'll trade it on the screen, and I'll just keep taking these setups. And I don't expect to have a high win rate because I'm not exactly sure how to use them totally yet, but that's what I'm going to do. But what I'm going to do is I still got to decide, but whether I put a limiter here or not, I got to see. So 50. So your take profit would be here. This is 10 points. This is 12 points. That looks really 51, 61. Oh, no, this is 12 points right here. So this would be like the risk reward. I know it's negative, but this is how he teaches you to do it. And the problem with this is, okay, if I put my limit down here on this red candle, let's say I see the fair value gap for him and I don't think we're going to trace into it. And I put my limit and I buy in right after here. Well, now the stop loss is going to be 4.4, 5.4, 5.6. So the stop loss is going to be up here. So I still feel like this would be a fine setup to take, and you just move your limit down. If you just mark it sold after the fair value gap. But I feel like it would just depend on the setup, because in this certain situation right here, the stop loss is still almost at the high of the fair value gap. Okay. I mean, this would be the actual stop loss right here, this swing high, because that's how you trade with fair value gaps and whatnot. But I feel like if you are taking the 30-second setup, it's going to depend on where the fair value gap's placed. For example, if this fair value gap was all the way up here and then we close down and we open this fair value gap, do you really think I would market sell into this, or do you think I'd wait for the limit? Someone tell me. Yeah, I'd probably wait for the limit. But in this example, the fair value is more down here, so that still tells me, okay, the stop loss is kind of enough, like defense, like is kind of still being defended enough by the fair value gap to where, okay, if we did trade to this blue line, we'd likely go back to this high. So it's going to depend on the setup. And for people in my premium, okay, you're going to see me execute these in Discord. You're going to see the difference. I'll try to point it out, and I will upload one of these live streams when I do this tomorrow. But I think it's just going to depend on how big the fair value gap is, whether I want to put a limit or not, or just market sell after. So let me see if I can find like a long setup here. So here's a low taken out. Okay, low day taken out. Again, this requires no daily bias, so if we take out a big higher low, you could use a setup. We take out that low. First fair value gap you see right here. Okay. There actually is a tiny one right here. Okay, but I do want to talk about this real quick. There has to be a green candle on the 1 minute if you're to take a 30-second fair value gap. So I think if we go to the 1 minute here, this candle finishes green at 254. Okay, so remember 254. And if we go to the 30-second, This was the 253 candle. This is the 254 candle. So I don't know if this would count. It might, but I don't know. I don't think so. I know it's barely there, but it's, if this candle closed green and the 1 minute candle closed green, this would count. So the other thing is you want to have the same color candle close on the 1 minute. Okay, so like in this example right here, this wouldn't count, but then this would up here because it's the first big fair value gap after. So for my model right now, I teach you move your stop to break even when we hit internal liquidity or whatever it may be. Okay, for this one, you don't do that. You just keep the stop loss. So here, okay, again, I'm going to show two different ways. So if you took the fair value gap after this candle close, which would be right here, that's about 14,871. Okay, a 12-point stop loss would be 6159. 12-point stop loss would be down here, 59. Which would this be a good stop loss if you did market buy this instead of waiting for the limit in the fair value gap? Why or why not? I'm expecting answers here. Would this be a good stop loss? Yes or no? This blue line. If you had to do a set 12-point stop, would this be a good stop loss? And tell me why. Yeah, exactly. So only one person got it right. So one person got it right. So I would say it would be a good stop loss because if we market bought this candle, being okay, there's a fair value gap form. If we market bought this candle, put a 12-point stop loss. Your stop loss is under the fair value gap and it's under the order block. I think that's an important thing to note. So if we do trade this far below and take out the wick of this order block right here, we're likely to probably close lower because we would be breaking mean threshold. So I actually would say this is a decent stop loss. So would I be allowed to market buy this one? Yes, I would because this is a good stop loss already. Or could you try to be fancy and try to get a limit down here, which would obviously be much safer? Yeah, you could. So if we limited it at 6.7, your stop would be 5.5. This would be good too, but again, what if you missed a move? Okay, this would be a fine entry because the stop loss is still on the OB, so that'd be fine in my opinion. But if you like pullbacks, this would obviously be the better entry. And then you can obviously tell it does hit the take profit wherever that is. And then I think the second fair value gap, second, third, fourth. Okay, I don't think any of these matter. I think it has to be the first, so it'd be this one right here. You can just see this one fails, kind of. Not really, but we kind of bounce off the OB. But this is a 4 o'clock, anyways. So there's that. Okay. Let me look for another example real quick. Yeah, you can. So I just went over how he hits sell side, then you get the setup. Okay, class of 2022 model, except it's on the 32nd. He's saying you can take multiple fair value gaps, like in this situation right here. So let's say we know the draw on liquidity is down here. Oops. Let's say we know the draw is down here. You preferably want to play the setup during the kill zone. So I would say like right here, here's sell side. Look for that 30-second fair value gap once you know the draw on liquidity is, and let's say we know the draw on liquidity is going to be this low when we're right here. Okay, you'd slap this, and then which doesn't get hit, and then like you could slap this, right, and then you could slap this if we still hit the low. Let me mark this out. So that's what he means by taking multiple. However, what's the problem with this setup right here? What's the problem with the setup? Yeah, it didn't really take on an important swing high. I guarantee you, if we went to the 5 minute, none of these would be swing highs. Like this, they probably wouldn't be swing highs. So that's the only thing wrong with this setup. Okay, this setup right here, this would be a major swing high in like the 5 minute. And we know here the bias is bearish because the higher time frame. So here, okay, it looks like the setup actually fails here. Okay, here it looks like we take out these highs, and then you get that 30-second fair value gap, and it does look like it fails. So this one fails. We take out the high again. We get another one, and then this ends up working, but this was never traced into. But based on what I teach, why would this be the better one? Yeah, it's the inverse, and we shoot up. The better entries are always when we like shoot up really quick and then shoot back down. This one we kind of wick up, but I've seen some really good entries when we get really green candles over swing highs, and then we shoot right back down 2 or 3 candles later. Like really down. Those are really good signatures in price. It's like a mountain. But it has to be over a major high, which I would consider this a major high because there's 3 equal highs sitting here. So, there's that. Okay, if we go over a little more, like right here, we take out this low. I think this was a 5-minute swing low right here. Yeah, it was. It was a 5-minute swing low. We also delivered from this fair value gap. So this would count. Okay, first 30-second fair value gap. It's also an inverse right here. You could kind of leave room for slippage. In this one, I would probably not market buy. I would put like a limit somewhere in here. So I'd probably put my limit like right here. And then 25. Your stop loss would be 12 points, which would be at this 13 level. Would this be a good stop loss? Yes or no? The reason why I'm asking if it's going to be a good stop is because it has to be 12 points. Sometimes the 12 points can be bad stop loss, and sometimes those 12 points can be good stop loss. Depends on the setup. If the 12 points is a bad stop loss and it's not over a fair value gap, it's not over swing high, then I probably wouldn't take it. Does that make sense? So yes, the proper stop loss here would be below the SWIC. But is this generally a good stop loss? I would say yeah, because I guarantee you if we go hit this low, we're probably going to go to hit this low too. So you got to realize the set 12-point stop losses are going to be good set 12-point stop losses, and there's going to be bad set 12-point stop losses. So when I do try to take the setup a bunch of times this week, my goal is to take the good ones. With like the decent stop losses. And then you can see this is also 1 minute inverse after. Let's see. So I'm just going to go to the previous day. All right, so here, took out this 5-minute swing high. And I would count these as, okay, if we took out this would be a fine run on liquidity because we would be taking out this and this too. And from a higher time frame perspective, these look pretty major to me. These look like they would be in the 5-minute to me. So really, once we run this, and this, that's fine for a stop run in my opinion. And we're delivering from a 30-second fair value gap anyways. This is just really textbook. So this kind of applies to my confirmation model right here, right? Are we trying to short this in live time? Are we setting a limit inside the 30-second fair value gap? Yes or no? Yeah, definitely not. Okay, why don't we set a limit in there? Yeah, exactly. Because when we go up here at this time, doesn't it look like the draw on liquidity is kind of up to this high? Right? It looks like it's up to this high when we go up this high. So if you kind of see this and then you see us reject, which we're not in the short, and then get that 30-second fair value gap, that's when it's a good setup. So this is just my confirmation setup I teach on YouTube, except it happens to be Cameron's model on the 30-second. Okay, we took out all these highs, this being the last possible one. Okay. And then you can see we get that 30-second fair value gap, first candle. Okay. And this is pretty advanced. Okay. But do I need the 1 minute candle to tell me if this candle is red or not? No, because this is the 1337 30-second candle. This is the 13-second 38 candle. So those, I already know this is a red candle based on the fractal and based on, okay, no, I'm looking at the time right now. I'm looking at the x-axis. Okay, I know that this is a red candle in 1 minute without even going back up to it. Okay, so I know this is a 1 minute red candle. Okay, it's off this higher time frame PD array. Okay, again, 30-second fair value gap. If you saw this 30-second fair value gap and you saw, okay, we closed, we created that gap, and you market sold here, okay, the 12-point stop loss would be 87, 97, 99. The 12-point stop loss would be right here. Is this a good stop loss if we market sold instead of putting a limit? Yeah, I would say it is, right? Because if we go to this, we're probably going to go to this high anyways. The proper stop loss would be here. The 12-point stop loss that ICT says would be here. So I would say it's a relatively pretty good stop loss in my opinion. And then you just target 12 points and you can see it clearly hits it. This is an example where, like right here, you can see you can take. Why would you not, like when ICT says you can take multiple fair value gaps? Why would that probably not apply to this situation? Yeah, it's too far discounted, and we already hit the internal low, and that's kind of what I teach. Okay, so we hit the internal low. Now that we hit this internal low, this would be a horrible short. And if you did market south this blue line, like I said, you would have already hit the take profit here anyways. Okay, this has already reached 10 points. So I'm going to go over a couple more. Again, I'm literally, for my premium members this week, I'm literally just going to execute all these setups in live time. And just, I'm going to probably take, my guess is I'll probably have a 60% win rate. Maybe we'll see. All right, let's look for another high to be taken out. All right, this high right here. This is a good one right here. 5-minute high. Okay, the reason why I know this is a 5-minute high is because if I just scan the x-axis, this is 1034 right here. This is 1019. This is 1010. So this has to be a 5-minute high because this is 1010. This is like 15 minutes apart. So this has got to be a 5-minute high. Oh, I'll trade the inverse model too, obviously, Zide. So this one, we take out the high, first 30-second fair value gap we get. But we never retrace to it, which sucks. Okay, but let's say we did the thing where we don't wait for the retrace. Okay. We waited for this candle close here, telling us, okay, this is a fair value gap. If we shorted here, 12 handle stop would be 9.6. 12 handle stop would be up here. Would this be a good stop? Oh, trust me, I'll still be trading inverses. Yeah, I would say this is a pretty decent stop because we have this. It's above mean threshold of this OB. Okay, this green candle before the down move order block. Okay, it's above the mean threshold. Mean threshold is at 50% of it, so it's right here. And it's a little bit above this inverse. So we have kind of three things in the way stopping us. So again, if you market sell this, I would say this is generally a good stop loss. Now, does that mean you have to market sell it? No, it does not. Okay. I'm going to kind of experiment with both. I'll put some limits in the fair value gap this week and also market sell a few. We'll just have to see. But I do like to stop just because it's kind of above the open of the close of the OB. So yeah, or you can do two cons, market sell, limit the other. That's a good strategy. Let's see. So that's from that day. So this one right here, there's kind of a 5-minute high here, okay, which I would consider. Now when we go above this high, ideally when I do take these setups this week, I think I'm gonna create this right now, but I do not want to see us go that high. Okay, this is way too high above this. Does that make sense? If I saw this over a 5-minute high, I would not look for a 30-second short. Does that make sense to you guys? I don't want it to be a lot of displacement, generally speaking. That's going to be my new rule this week. Like, this is too much displacement for me to take. So, again, when I do look for these setups this week and take all these setups, I do not want that. Okay, this is something more... This does make sense. Okay, we barely displace above this, so this is a setup I would look for. Which you can see it's tiny, but we do get the fair value gap right here. It's actually a BPR. It's a 30-second BPR. And it would probably 09. Yeah, it did hit the type. It hit 20 points. So again, generally this week, the displacement I'm going to be looking for is something similar to this. Okay, not this. This is way too much. Okay. Something I like to do is I'll go on Tradeify or Tradeify right now. Something I like to do is if you draw a fib, you can measure the displacement by doing this. How do I do it again? All right, I do this. So if we measure, I'm trying to think how I do this. Oh, I remember. If we measure here to up here and then move it over, let me just turn on the 1 and 0. Nothing else matters here besides the 1 and 0. Okay, we have the 1 and 0. If we measure this range, okay, and we displace above it, I consider good displacement above at least 50% of this range. Okay, if I start the fib right here, 1 to 0, if I copy and paste this fib, okay, so this is the same range, and I go down here, it started at 1. Does this wick reach at least 50%? No, it does not. Okay, so to me, this would be considered not good displacement because it doesn't reach that 50% level. Okay. An example of something that does would be something like this. Okay, measure this range right here, top to bottom, duplicate this fib, move up to where we create the market structure, move the 0 right here. Do we go more than 0.5 of the previous range? Yes, we do. To me, this would be good displacement. So that's kind of how I've been measuring displacement. Or I don't draw them out every time, but that's how I measure like good displacement versus the bad displacement. And I don't think ICT's ever said anything like that. But if you want a hard set rule of, oh, what's displacement? Like I know T-Trades talks about like, oh, there's no displacement here. And ICT says, well, there's no displacement here. Okay, if you want a more mathematical way of kind of figuring out is there displacement or not, just do this little simple method. Okay, you just measure the 0.5, the range. You measure the range, duplicate the fib, and then you start the next fib at the place where we break, and then you just see if it goes past that 0.5. I kind of eyeball it now, but that's just a good way to do it. So I think that's going to be it for now. Again, this week I'm going to be going over. I'm probably going to take like at least 10 trades a day because I guarantee you I'll see a lot of these. It depends on how long I'm live for, to be honest. No, I'm not going to take 10 trades a day. Never mind. Maybe like 5, but I'm just going to do this 30-second setup, and I'm also going to do my inverse setup. I'll kind of balance the two, but I'm literally just going to buy an eval account, and I'll see how far I can get with this. So, yeah, I'll update it. I'll do a recording one day to show you guys how you can watch all my alerts. Yeah, or you could do that. D1 trades. That's probably the smarter way to do it. I'm not gonna lie. So yeah, that's gonna be it for now. Okay. Again, I was kind of reviewing rather than teaching. Okay, kind of showing you what to look for in these setups. But yeah, make sure to watch the live stream. I'll label the live stream I upload this week. Whatever day I take these setups, I'll make sure to label it so you guys know. But yeah, tomorrow should be very interesting, so I'm just gonna try this. Yeah, so live stream every day for premium members. No, if it goes above the 50% of the previous range, I would look to enter. I'd look to enter on like a reversal or on a pullback, because if we go above 50% of the range, that tells me the displacement's pretty good. It tells me it's good enough to enter on a pullback if we get it. I'll be live streaming this live stage channel where I'm at right now. Yo, I see Dave teaches. Dave, you're in here. Do you have any thoughts about this? Do you measure this? What I just kind of talked about, if we go above the 50% of the range or not. Like if I drop fib from this high to this low. Let me just take these off. Like, do you care? I don't study your stuff, but do you care if we hit that 1.5 or not? Let me just change this around. See, like to me, setups don't work as much if we don't go at least 50% of the previous range. That's just me. I don't know if you can type right now, Dave, but that's I don't know. That might not even be related to your stuff, but yeah, I mean, this definitely is a close. And then you can just see this candle closes way above the swing high. And then on the reversal, what do you see on this reversal? Someone like Dave, he's probably entering here, but where do I enter? Okay, yeah, that makes sense, Dave. Yeah, I don't trade it. I just kind of use this to tell me if it's good displacement or not. But I don't use it for an entry per se. Yeah, exactly, Zide. So you can see we displace above 50% of the old range right here, telling me, okay, this market structure is very bullish. If we do pull back, I will look for a long because we did displace over the 50% of the range. And then right here, I'm not going to try to enter here, but you can see there's a clear inverse model. Here's where I'm entering. I'm entering either an A, this candle I'll market buy, or depends on how I'm feeling the day, or I'll just wait for a retracement, which would be right here. Most likely, I'd probably just market buy this candle, and then my stop would be a close under here until we hit this high up here. So, again, you could have bought the pullback, got a really better fill, or you could have waited for the inverse and maybe had better conviction, because I feel like sometimes I don't have conviction when I'm buying pullbacks versus if we have the inverse. I have a lot more conviction because I just have a lot more trust in the model. I mean, that might not make sense to some of you guys, but it's almost like I'm like scared of buying the knife versus, okay, I'm much more confident when we inverse a knife because I know we're probably going to go up and hit the high. Like, it just makes me a lot less emotional. So that's why I do it this way instead of trying to guess where we're going to pull back to. Someone did talk about, so Dave's teachings, someone did talk about the setup on, I think we go to NQ. Dave, tell me if I'm getting this right. Oh, by the way, do you guys all like my artwork? So, right here, I think someone posted a chart relating to Dave. You short the 0.70 zone or something when the structure makes a new low, blah, blah, blah. I don't even know what he said, but something like this. Or I don't know how exactly you draw the fib. Maybe you draw from here. And you just point I don't even know. Something like that. And then here's your zone. Or see, he posted something like this. There's a short setup up here or something. I don't even know. Yeah, that's it. And he pointed to 70. Okay, yeah, that makes sense. So, yeah, that was a nice trade. Dave already knows what I'm going to short. I'm shorting this right here. When we close beneath this, boom, it retests, boom, right back down. That's what I'm shorting right there. And this is the 1 minute chart, so this is clean. And then this is just extra confirmation closing below this. You can see clear candle close below, bodies retest perfectly, and then boom, right back down the sell side. Really bummed I missed this move. This is I was playing tennis, but I'm bummed I missed that short at the end of the day. Probably would have been up a lot more points. But to me, really in this move, once I see us violate this, I already know we're going to violate this, because if I see us rejecting off a 15-minute fair value gap, such as this one, and I see us really quickly go down and violate the first discount array, I know we're going to violate the next one, because we're delivering from here. I know the daily time frame is bearish, right? The daily time frame is very bearish right now. I think we're going to go to here, okay? I would say it's fairly obvious. We're going to go to this low. So any setup where I see us rejecting the 15-minute BPR, whatever it may be tomorrow or the next day, or whatever it may be, I know we're probably going to keep going to the low. So I missed that setup. I would have shorted this if I was not playing tennis on Friday, but that was really nice. For this week, the one thing for you guys learning, a lot of the questions I've been getting, it's like, oh, why this fail? If you ever ask me why does something fail, always check to make sure there's not like an SMT first. Okay, I've really been implementing SMTs in these inversion setups, and I'll not take a setup if I see an SMT, unless I'm really confident about the higher time frame bias. But a lot of people have been asking me questions like, why does this fail? And it's most of the time I answer there's an SMT. But just make sure you're watching for that. I know it can be tedious checking for an SMT every 5 seconds, but before you set your setup, just check MQ, check YM, check ES, just make sure there's no SMT, because the quality of the setup just gets way worse if there's a potential SMT. And I know you could gamble and be like, oh, this SMT should break. You could gamble it, which I have before. My higher time frame bias is so confident right now, where if I saw a 1 minute SMT in the lower time frame, I probably would gamble it and say, okay, it's going to break. But once we hit this low, if we get any more bearish SMTs after this low, I'm not gambling that, okay? Because I know we're probably going to hit this, but we're bound to get a retracement out to hit this low. So I would gamble a bullish SMT breaking in this situation, because I think the draw is going to be obvious. But once we hit this low, I would not gamble any bearish SMT breaking. Okay, I would just take a setup that does not have an SMT. So, yeah, inverse entries give way more entries than other ICT students. Like, I'm in a group chat with a bunch of people like Stoic. Stoic obviously does use your stuff more now, but it's like me, Stoic, AM Trades, Pickle, and they're entering like one trade a day, and I'm like, how? Like, the model, like even right here, boom, right here, there's an entry already. Very retest. This is all hindsight now, but boom, another entry right here. Entry. This is just 2 tonight. Right here, long entry. Boom. Once this candle closes above, long entry. Just get these little scalps. 3 entries right there. Just, there's a lot of entries. A lot of entries. Nah, that makes sense. Once I take 3 or 4 setups a day, I'll just stop and I'll just switch to demo count. Like last week. Last week I went 3 for 4 in the Newark game session, so I just traded demo the rest of the day. And it's not because I'm not confident. It's just because I'm in class and I don't want to be emotional just in case like a setup doesn't go my way. I don't want to be emotional in class, whatever. So I'll just take a demo if I'm already good for the morning session. I think that's gonna be it for now. Dave, if you want to DM him, it's fine. I don't really care. Have I ever lost unfunded? Yeah, I've blown up a funded account. I've blown up many eval accounts. I've blown up a funded account. So yes, I have lost. If someone tells you they have not lost and they haven't blown up at least one eval account ever or one funded account ever when they're first experimenting or starting the trade, they're probably capping. Because when my first ever eval account, I blew it up. I really didn't know what I was doing. Didn't really have a good plan. Didn't know how the trailing drawdown worked. And the trailing drawdown ended up stopping me out. And the trailing drawdown is just something you have to get used to. And it's not going to be easy to pass your account the first time. But 50K or 100K. How much percent your risk per trade? Not that much. Like 0.5. So yeah, tomorrow I'm just gonna try to take a bunch of 30-second setups for you guys in stream. Again, all I'm gonna be looking for is a rate of a high, and then I'll be looking for a 30-second inverse or a 30-second free rally gap, and I'll try entering each one, and I'll see how it goes. So I'll buy a fresh new eval account tomorrow probably. I will see you guys later. Let me know if you have any questions. Just ask me in trading chat and tag me. And yeah, I'll see you all tomorrow. Peace.